Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist here at NinjaTrader Live. It is August 9th. Dog days of summer are here. Have a great panel for you again this evening. Checking in through the middle of August and the doldrums of summer trading here. It's kind of a quiet weekend. S&Ps are opening here just about flat. Unexciting. NASDAQ up 14 basis points at 29,875. A little bit stronger now, but the Russell down 8 basis points. Dollar a little bit stronger. Oil up 25 basis points. The war headlines over the weekend really were not too much. Doesn't seem like we have a deal yet. The Strait of Hormuz remains closed, but we're low-keying it, according to the president, whatever that means. I'm not exactly sure. Bonds a little bit softer. So look, it's got a little bit of the, man, this war is never going to end type trading, but the equity market is impervious to the war, as we saw for the most part of last week. But let's bring the panel in. Sarah is back after a week off. Welcome back, Sarah. Pax is here. Farm is here. How is everybody doing on this fine Sunday evening?
Great. How are you?
I'm doing great. I picked a hell of a week to miss the Sunday Open, but hopefully people watched my analysis on my video at least.
Yeah, it was a wild week last week, and I would be remiss if I didn't mention gold. Gold up 8.5 points, up 20 basis points, back above 4,400. Last week was a breakout week for gold. A lot of talk about whether or not we're back into money printing era again, given some of the dynamics and rhetoric from the Treasury and how they're dealing with the yen and some of the intervention that's going on there, and whether or not the Fed not hiking rates at the last meeting, what does that mean? So the gold market caught a little bit of momentum. We'll definitely get into that today. Where should we start? Let's start like we normally do when Sarah's here. Sarah, how are you thinking about the setup for equities this week? You've had a week to kind of, or you have had some time to digest and be away from the screens, but stepping back into it here, what are the charts telling you as we head into Monday?
Okay, before I talk about the coming week, I kind of want to talk quickly, as quick as I can, about last week and what happened.
For sure.
That's where I want to start. So here we've got the weekly time frame for all four of the big futures: ES, NQ, RTY, YM. And what happened last week, and like I said, I wasn't here last Sunday, but I was here the previous Sunday, and I was mentioning how important the monthly flips are. So like new monthly candles starting, because that is when things can just turn around on a dime. Because when you have a giant red month, like towards the end of, July, you're not going to turn that around with like a week left of the month. Oh, I hope my power doesn't go out in Florida. The storms and FPL sucks, Craig.
It does.
So if I go bye-bye, that's why. I hear it thundering right now. But anyway, so the new monthly flip is important because it can change continuity. We can quickly change directions. And that's exactly what happened the first week of August. And not only did that happen, we had all four kind of take simultaneous weekly hammers to the upside. So you had all four futures doing the same thing at the same time, which is what we call a simultaneous break, which is exactly what it sounds like. All the things doing the same thing at the same time. So you want to jump on that train. That is one of your highest probability trade setups. Let's see. What did ES do? ES 2 weeks ago took out these people's stops here, made a lower low 2 weeks ago by this like big hammer week, and then they reversed straight to new all-time highs. We were calling for that in the weekend video. NQ is still an inside month, but it's trying to not be. It's trying to go to new all-time highs with everything else. I'm a little surprised RTY didn't hit a new all-time high. And something else I can show you just quickly is the strat. This is the strat combo sheet, and this is how we play our setups. And you'll see this guy right here. It's called the PMG, which is a pivot machine gun, or we refer to it as like a series of five lower highs or higher lows, because stops are stacked along those. So when that kind of reverses, you can expect a big boom. And if you look at this candle, it's exactly like what happened on NQ and RTY. I'll show you their charts again real fast. You can see just lower high, lower high, lower high, lower high, and they just went exploded. So with that being said, that was the explosion last week on the futures and why. So you had new monthly continuity and then all these hammer weeks going in force. So this week, there's only really two things that could happen, technically three, but only two that I see as probabilistic and realistic. Since we got quite a big move last week, this week, one of two things. We're going to get stuck inside week, which will not be fun. And it should be hands-off trading, in my opinion. I won't be trading it if we're inside on all of these. That means simultaneously the market's not doing shit. And I don't want to be there. Or they're going to try and continue to go up. And if they do that, we have to stay above last week's highs for that to happen. And you guys hear me talk about the line in the sand all the time. So for ES, last week's high was 78.20. So for us to continue this uptrend, continue going up, we have to stay above that level all week. And if we don't, we can start coming back in. So that's your bullish line in the sand is last week's highs on all of these names. So all of these charts. So NQ above last week's highs, you could be long 30.074, but if that starts failing and coming back in, you got to kind of play defense and maybe even flip short, especially with NQ still being an inside month. Same deal. So RTY above 30.58, and then YM above 54.884. But with, like I said, with such volatility last week that we were blessed to have, I'm not expecting as much for this week in the futures. Gold is a different story, but I'll shut up now and I'll let Farm show his charts and talk about his levels and all that fun stuff.
Yeah, I'm curious. Yeah, we'll kick it over to let's kick it over to Farm. But Friday was payrolls. Well, last week, first week of the month, we had a ton of data all week, culminating with the payroll number, which was atrocious. Big negative number, negative revisions, and some people tried to explain it away. The seasonality, the World Cup, government, whatever. It was a pretty bad number, and the equity markets were like, "Give me more." So, I know you're apt to say when the markets do things or asset prices do things kind of different from what you would have expected based on news. That's interesting. That's important. That's noteworthy. How are you thinking about the reaction to that payroll print for Friday, and what's the setup for you for the week?
Yeah, I mean, it's tricky. I think two things to note is that sure, we ripped on the payroll. You're going to get that algorithmic response, right? Dollars going to get stepped on, yields are going to get stepped on, equities are going to bid from the machines, right? It kind of was sold by the human response to some extent, right? I mean, they sold it a little bit pre-market, they bid it up again, and then it just sort of faded. Never actually took out that high. So it's not like, there was too much excitement about that print. I think even gold didn't even take out that high, right? So, that said, I don't see that as bearish necessarily. I'm not saying that they were selling into it necessarily. We had come a long, long way, very, very quickly. We had hit something like, 2.5 times the weekly straddle by Tuesday or something. So I'm not going to read too much into it. But it's also going to be hard to sell ES in particular as it sits in this breakout. And so I do think it's important to talk about last week and how this broke out, because first and foremost, this is exactly what a breakout should look like. You see there's effectively no volume because there was acceleration through the breakout. That's exactly what you want to see. And now we found a temporary area of balance on ES, right? NQ was not broken out. So, that's what a breakout should look like. We have extremely thin structure from Tuesday, I guess it was, and sellers didn't really do anything with the weakness on Wednesday into Thursday. They couldn't even get back through that thin structure. So it's hard at this point to see any reason to want to be meaningfully short on ES for sure. But that's where we're at. Like Sarah said, we took those stops. We came down to the glory hole piranha trap and ripped certainly way faster than I would have expected. But here we are, right? So ES is clean breakout. There's just not a whole lot to say about ES until or unless that breakout is given back, right? We could back test that breakout, still be an inside week, and that would be reasonably constructive from that perspective. So try not to read too much in NFP. It was see, Craig. The thing is, if you're an economic permabull, it was a dash. It wasn't a negative sign. Like, what do you mean? It just said jobs at 23K. Like, it's a dash. It's fine. Yeah, like it was pretty gross to see that, I suppose. And I think we need to see a few months, though, right? So that's ES, like just the biggest picture, right? And NQ with the biggest picture. I mean, again, it ripped to the moon. It came all the way up to that 30,069 by Tuesday, I guess it was, or Wednesday. There's no surprise that it stalled there. We even put in a higher low above this key 269 to 369. They didn't even let it pull back anywhere near like the 38.2 retrace. So like it looks constructive. But I do think this 30,069 to 269 on NQ is going to be extremely important. They bid that and just send it, right? It can join the fun train. But a little bit of digestion consolidation wouldn't be bearish. Again, there's still like a tremendous amount of room for some kind of a higher low on both ES and NQ on a daily basis. I mean, you come all the way back down to like the 28,400s, and that's like a 0.618 or something like that. I mean, it's not a horribly unhealthy retrace to see something like that. So again, like if you're bearish for macro reasons or whatever it is, I think that's fine. I just think that for now, and hopefully I'm jinxing this by saying this, for now, shorts are going to be rentals until there's some kind of meaningful break. And like, so I don't ramble on the entire hour. I'm going to flip to an RTH only chart on NQ because this I feel like is what matters most to me. You see this RTH bullish RTH gap, right? So you have Tuesday's low to Monday's high. So that to me is what matters most. We have a very, very clean 4-day balance on NQ. If this breaks to the downside with continuation, then you have a swing high in place. And the question then becomes, are we seeking a daily higher low? Or is this a breakdown to just rug back through some thin structure, go to zero, possibly negatives, and maybe even imaginary numbers? But that to me is all that matters, right? Whereas if we take out these lows, perhaps, reach into this bull gap, and we find fresh buyers yet again, then that's going to look like sellers were just trapped probably for new highs. So I'm really watching this 4-day range here. Aside from that, I'll flip back to ETH. This kind of 29,432 to 449-ish range. I mean, look at this. We have so first of all, we have Tuesday, excess low, absolute face ripper, trend day up, right? They come back into it on Thursday, excess low. And wasn't quite that strong off of that low, but okay, fine. Friday excess low. Like this isn't like the sign of strong sellers in the tape necessarily. I will say that this is triggering a short setup, or it did trigger a short set that I had here. I felt like taking out popping Friday's high and coming back through range would be a little bit more bearish than just trading lower first. It's very annoying that NQ did it and ES did not. But again, the biggest thing that I'm watching really for my bias for this week is that bullish RTH gap on NQ, first and foremost. And then I think on ES, which again, annoyingly did not take Friday's high, you've got all this volume above 77.21 to 27. Again, like all these sets of single prints. So that just means that only a single 30-minute period traded those prices. That's very, very thin structure that, in theory could be readily retraced. At the same time, you could potentially have trap sellers, but like there was no seller on that day other than people that were short calls into it that got completely blown out. So in theory, if you offer this 77.20 to 77.27, you could rug back down to Tuesday's low, again, flipping to RTH only. You've got the same RTH bullish gap, and that's a long ways away. And guess what's sitting sort of right at that spot, prior all-time high. So to me, you need to watch nothing else in terms of like a big picture for your decisions this week on ES. And NQ, it's really that bullish RTH gap. You come back down, you back test the prior all-time high, and it holds. It's a long. And I do think we could even provide allowances for traps there. If we do see continuation higher, generally my target, first kind of like more meaningful target is call it 79.20 if this break sustains. So I think, again, if you get persistent weakness back below, this recent low on Thursday, Wednesday, what have you, and then rug that structure from Tuesday, it's a nice short, but it's probably still a rental until or unless we're back below that prior all-time high. Then you start having to ask some questions, especially if we saw some correlating weakness, which apparently we only have correlation to the upside. When indices are trading lower, then we get that dispersion that sort of holds ES a little bit pinned. So really watching mostly NQ for this week in terms of equities and what it does around that 4-day balance and that RTH bull gap. But ES could be the same thing. We could see some weakness, and then we'll talk bearish things during the week if we actually break back below the prior all-time high. But it still has plenty of room for some kind of a daily higher low here. So that's kind of where I'm at for this week. I don't think there's anybody on this planet that loves shorting this pig as much as I do, except possibly PAX. And I would love to, but they're going to have to prove something to me first before I join them.
I have a question, Farm.
Yeah.
When you keep saying we have room for a daily higher low, what if you go to the daily chart on Thursday? What do you consider that? Or
yeah,
why?
So it could, on ES. On ES, it could be. Yeah, I mean, ES, it could be. So I see NQ as a multi-day balance. So that if that breaks then to the upside, then that's your daily higher low, right? We haven't now made a higher high to confirm that. But yeah, it would be. So inclusive of what we've done.
Mm-hmm. Got you. So so basically you need to confirm that by making a higher high is how you look at it.
Yeah, and I mean, you could still make, on just, I don't want to pull up a daily chart because it'll blow up some of my chart decks and profiles here, but you can still put in a break. You could break that balance to the downside on NQ. And if you look at your major structural low on ES and NQ being here, and we just sort of ripped in a straight line, we could still come down and find some kind of a balance, re-break that back up to the upside, and that certainly is higher relative to the current low, right? So that to me would be a structural higher low as well.
I gotcha.
It is the second week of the month now, so the window of potential weakness is closing, which means the bar for data macro to overwhelm some of the flows is higher. We're going to need to see bigger disappointments in the CPI, which comes out on Wednesday, or the PPI on Thursday. We have bond auctions this week, 3s, 10s, and 30s. A lot of supply coming, so we'll have to get things that are out of the realm of normal in order to really shake these equity markets in a week before expiry. That's typically been the pattern. But Pax, want to kick it over to you. How are you thinking about the setup for this week? The non-farm payroll from last week notwithstanding, equity markets seem like they don't really care too much that most of the macro situation in the U.S. is getting worse, not better. As long as the AI story is good, everyone's happy.
Well, it'll care. The bonds are under some gigantic levels, especially that the old yearly low at 109.16. The 30-year is sitting right where the 10-year is sitting right at where it was on Fed Day, 108.18. Gold. We talked last Sunday about golds. We were trading around 40.80, I believe, last Sunday on the reopen. And if we'd have reclaimed 4,100, then the upside level was 41.39 to get long at, taking profit of 41.80, adding more above that to 42.15, and the swing completes at 43.25. And if we get above 43.25, now the next swing is up to 44.24, and then above that to 44.90. So, gold rallying, intervention, and just so many different things going on. The war and a low-key deal or not a low-key deal, or we're low-keying it and they're low-keying it. NGL, not going to lie, all of the terms that these young kids use now that the president is using just pisses me off. So what are we going to do? Nothing. This is the Nasdaq is still weak and underneath the yearly opening range compared to the S&P. This is so I don't want anything to do with the Nasdaq until it gets above 30,263, and then we'll see. The all-time high 30,968. The S&P, that's telling. I mean, that's just so strong. But on the weekly reopens, and even crude is rallying like crazy. So the capital flows on the weekly reopen is a little bearish. If you guys are trading this on the reopen, you want to see, you can sell it against 77.79. That's the area that you're going to sell it at 77.79. And I don't know. You just look for 15 annual rotations from there. So I don't know. I'm very much looking forward to next week. And not next week. I'm looking forward to Wednesday and then Thursday, CPI and PPI. I don't, like Sarah said, I don't think I'll be involved in the market except for gold positions. I'm long gold. I'd like to be long crude. I'm not. And I am short bonds. So outside of that, I want nothing to do with the equity markets until it clears up.
Yeah. Just a reminder, chat, if you're new to the program, make sure to subscribe to the channel, ask questions for us. We're always monitoring what's going on in the chat. I do want to kick it over to gold. Gold had a big week last week, as I mentioned at the onset. It seems like folks are realizing or speculating that when the bond market weakness accelerates and there's worries that Japan is going to add to that pressure by selling more treasuries in order to slow down the yen weakness, that's something that piques the treasury's interest, and they do something about it and try to intervene or try to jawbone. And they did that again last week. And it seemed like the gold market picked up notice of that big move higher. Talked about it a bit last week. A bunch of us, I think, caught that move in the middle of the week. But Sarah, you weren't here for that gold move, but I know you were trading it from the phone. But as you look into the gold chart now, what are you seeing? Is this a sustainable move to the upside? Do we need to check back a little bit? How are you? How would you view it now?
Oh, I hope we get to new all-time highs. Not going to happen this month, but no, exactly what has happened is it's all strat, like it's perfect strat. So 2 months ago in June, we made a lower low to March's low. Then we consolidated in all of July, so an inside month. Again, stuff that we don't like to trade because it's by definition not moving. It's an inside month. It's stuck inside its previous month's candle. So back to the strat sheet, this would be what we consider an inside bar reversal after, and this is the really important part, after stopping people out. So then we can go. So back to my sheet, just because it's so easy to show this stuff right here, this inside bar reversal. So this was what is this month? This was June. July was inside month. August inside and up. So that's what's happening. Perfect strat stuff, like I said. Ooh, I don't know what I just did to that screen, but so we want to see it. Who just yawned?
I did. I'm sorry, Sarah. I'm sorry.
I'm gonna get ya. It's okay. So Pat or that yawn like what threw me off. I'm sorry.
I'm tired.
I know. Okay, so we're trying to get to the monthly target for gold, which is 45.77. And then if we keep rallying, we can, try and trigger last quarter's highs. We still have 2 months to do it, which would be to get up above 49.17. And then the target would be a new all-time high, but that would probably take till the end of the year. But for now, as long as we're above kind of baby steps, right? I'm getting real ahead, but that's kind of what can happen. So the month can trigger the quarter and then we can get up to all-time highs. But it's very important that we stay above last month's highs. So let me draw something for you. I call this a take action window, which is basically what I just showed you on the strat combo sheet, your entry from your target. So it's basically your profit potential, and you can draw it as a range. So this is your inside month and up, and your target's up there. So what I tell people is if you're in this gray box, that means the month is in force. You're trading in the direction of continuity. So anytime you get like a pullback, corrective activity, and then a reversal back up, you can take it as long as you're in this gray box. So again, we have to stay above last month's highs. And then anything in here. So if we get like a 2 down, maybe we get an inside day today, and then maybe tomorrow we get inside and up, you can take that long. So we just have to see how it shakes out. But also, we don't want to get stuck inside weak. And if we do, that's fine. Consolidation isn't crazy. You can see we took out this major pivot high back here at 44.03. So that was the like major first target because it's a pivot high target. So we had to make the shorts do something there. So if anybody had been short using that pivot, they just got screwed. We just made them get out. So now, you know, you can expect profit taking at those levels. Those are profit taking levels for the longs. So now we got to see, you know, what happens. But all in all, very, very bullish gold, bullish silver as well. I can talk about the silver chart.
Yeah, I was going to ask you, does the silver chart confirm that? Is it leading? Is it still lagging, but it's moving higher? How does it compare?
I feel like so silver on the higher time frame chart is lagging, but on the lower time frame chart, it was leading. And what I mean by that is we made this lower low on Monday after stopping out those guys. Anybody long using this as a stop got stopped out, and then we reversed the day up and went up, and that was the monthly trigger. So that's, you can see where profit taking happened at that purplish pink line because it's a pivot high target and it's also our monthly trigger. So if you look at the month, silver, it's a little different setup than gold. Gold was an inside month and up. Silver was not an inside month last month. We call this a 2 down. So this month it's a little weaker relative to gold because we're sitting right at the monthly trigger, whereas gold is well above it. So gold stronger, but same situation really is we've made lower lows to the March lows and now they're reversing. So that's how broadening formations happen. And so, yeah, long for sure both, but gold is stronger.
Yeah.
Are you not entertained?
Normally, so I'm curious, gold, silver, Bitcoin, normally we hit Bitcoin at the end of the show, but someone did ask, and I think it makes sense to maybe just address it here. Did the Bitcoin chart anticipate this gold move at all? Does it look similar? Because
No.
when you think about, I mean, like the idea that gold is being driven by this, return of money printing or Fed expanding its balance sheet because it's going to be lending back to something that the BOJ has to do or Japan has to do. You think Bitcoin would be part of that thesis? And so I'm curious if, is there anything to suggest that Bitcoin looks similar at all?
No. Bitcoin just straight up sideways. If that's the range, that's a swing high, swing low. So 1, 2, 3, 4, 5 weeks we're in here. It could get interesting on Bitcoin though if we get above last month's highs, so above 66,923. And then we'll have to see what happens once we make a new high. Why did that alert die? We'll have to see what happens because they're trying to come up and make a new high, which I gave this target on 7.5, but they've just been doing nothing like this summer, just kind of trading sideways. So yeah, they're trying to come up here, and then once they come up there, then we don't know. Then we're gonna have to see if they stay above this range and try to expand it up, or if they take out this high and start coming back down, which is also a very real possibility because you guys all know we've got that August 2024 major pivot low at 49,000. So it could easily come make a new high, get, early bulls really excited and then just dump on them. So I'm not really interested until Bitcoin can break above 67,264, and then I want to see what it does.
Yeah. That makes sense. Pax, what are the key levels for you for gold here? Now that we've, starting to see some of this breakout, what are the triggers? What are the targets? How are you thinking about it here?
Well, I've outlined those levels the last month, and the Uber Eats driver that was trolling me earlier, RPC. You go back and watch the fucking show the last 2 months, you goof. Anyway, the quarterly pivots in crude is not in crude, in gold is 40.37, 40.78. So you're long above that level to 4100. You're long above that to 41.39. Adding above, taking those to 41.80, taking profit there. Adding above to 42.15, adding above to 43.25, flatten there. Above 43.25, you're significantly long, and you're taking those to 44.22. That is the old, I outlined that on Friday in the show, and we talked about it going back, I don't know when we broke through the 200-day moving average. That was the old 200-day moving average that we broke through when we came down, and I'll tell you in a second when that was. So that's an old level. That's an important level from early June. It was a 200-day moving average on June 5th. When we took it out, that was the first time since 2023 that gold was below it. So, above 40, so you're long 43.25, you take profit at 44.22. Add above that, you're going to flatten. The next swing is completed at 44.90. We get above 44.90, the next swing is another $100 higher. I have not made this a secret. I am long gold. I want to be long. I want to be longer. I want to really be long gold. As I said in the last month or so, and got a chance to do so on midweek this week. So let's see last week. So let's see what we're going to do. Gold is not going lower unless it's just a trade lower. And if we would have taken out 39.83, then I would have loved to have bought some at 37.75, but we didn't. The market turned around and rallied. And now we've got an interesting setup for the week. I am not looking for anything in the indices except for maybe, a rotation out of the opening range for 15, 30 points in the S&P, or 65 to 130 in the NAS. But crude and gold and bonds are the most important, I think, to me right now, are the most tradable markets with the least risk, the most flow, and the most clarity. I think those markets have absolutely the most clarity. The indices are, I don't even know. They're divergent. It's strange, it's weird, and it's very unclear to me. And if it's unclear, then I really don't want anything to do with it. But gold, I think, is the best. Bonds and crude, there are better things to trade than the indices.
Yeah, that makes sense. And Chad also wants to let you know that the White Sox are winning 5-2 now, top of the sixth. So,
I've been checking.
So that's important as well.
I've been checking.
But
we left early. We got
rained out. Also, what's really important is my t-shirt request. So we got to show them, guys. The shirt, the Lane shirt.
Very nice. Yeah. What's on the left side of that shirt?
That is an absolutely amazing breakout. It's real and it's spectacular. Amazing breakout.
That's an explosive pattern to the upside. Yeah.
Oh boy, I have fun with you guys.
Oh my God, you should have heard what we were. Never mind. Nice.
It's an inside joke.
Yeah.
And thank you, Elaine, for sending that over to Sarah and giving us all a laugh. We appreciate that. But Farm, last week when we spoke about gold, I think you had mentioned being long miners and waiting maybe to get into the commodity. Kind of felt like maybe we were a little bit early. So we were a little bit early, but the mining position was the GDX position or whatever mining position you had worked out well. What gold surprised you last week, and how are you thinking about it for the setup here now?
Miners had a big week, up 21% or something. Have pretty much chronically underperformed gold for since most of us have been alive. We'll see if that changes. I actually think that could change, but we'll see. It's early, so gold had been in that it was like a 5 week or so range, right? And it was acting well. It was acting well when it should not have acted well. I said a few times on the show. I mean, look what yields are doing. I mean, and gold's just like, nah, I'm fine. Didn't want to go any lower. And it was reasonably bid again when it probably should not have been. And this was after many months of acting very poorly when it should have been acting well. So I did take a little trade long on gold with light leverage, anyways, into the breakout. But yeah, my bigger position is the miners. Now, I promised Sarah, because we're coming into really what I see as some major resistance on gold, basically a Friday's high and not too much higher up into 4,500. This 4,450 to 63, I think, is going to be important. We're coming into some major resistance. So I have to say that, like, okay, I said some bullish things about gold last week. We're going with a reverse jinx here. Like, it's probably going to zero. Like, I mean, do you realize they don't even have earnings, this GC company? I even tried to contact investor relations at GC. They don't have like a governing board. There's no investor relations. Like, forget about gold. It's terrible. It's definitely going to zero, possibly negatives, and maybe even imaginary numbers. So with that out of the way, this is resistance.
Hey,
this
it
is
did
a tough
happen to
spot.
oil.
That's right.
You know,
That's right.
I kept telling
forward.
everybody, and I kept telling everyone during that too, that oil can go negative. No, it can't. No, it can't. I can't tell you how many fucking people ended up buying oil at like $5, you know, and then sent me DMs about how they got killed. I can't believe.
Margin calling. Yeah, so I mean, to me on gold, again, big spots up here. Let's see, you know, gold just loves to rug the chasers, doesn't it? So I mean, we'll see, you know, if we get a pullback, some consolidation here, and that would be fine. It would be reasonably healthy. I was kind of using the 42.38. I'm using 42.38 to 43 as generally the breakout area for me. Though I do think some deeper traps would be allowed. The most constructive situation is just to kind of hold this 43.32. I can barely even see my own levels on here. They're so light. 43.32 to 37. That would be reasonably constructive for direct continuation. I think it would be okay to come back down into these 42.74 to 85. This is where I got long on whatever day it was. I don't know, Thursday night, Friday. I guess it would have been Thursday, right? We've got this big single prints from Wednesday, back tested them nicely and held. So I think you generally want to see that spot hold. If not, then you could come in for a deeper back test again around that 42.38. And the last kind of spot where I'd start, you know, clenching my cheeks just a little bit. Really, I mean, probably not though on the miners. But I would be out of the leverage gold position. I'm not letting a green trade go red. But even something like a back test to 4,200, 4,209 to, you know, I guess 4160, 4169 could be okay. But as Sarah said, I mean, you don't really want to see it come back below last month's high and spend any appreciable amount of time. So I think if we did see some kind of a deeper trap, it's a little bit safer to wait for that to recover and shift structure back to the upside on a 30-minute time frame. But, you know, she mentioned 4,900. I mean, I put together a weekly plan with some levels, and like I don't think it's going there this week, but that was kind of my last level that I figured would, you know, last a few weeks if we did get continued upside. But I mean, again, I can't stress enough. Like, I mean, if I were just straight up like max leverage long gold, I would be looking to hedge that with a short, you know, anywhere kind of near this 4,450 up into 4,500 range, because I do think it's pretty nasty. And like, we still have to acknowledge that, I mean, yields are still kind of screaming. And like, I mean, I don't know, maybe gold decides to care or something. But for now, it has been acting well when it should perhaps not be acting well. And if we do see like yields cool off after that cold data, we see the dollar, you know, soften a bit after that cold data. And like, depending on what the prints do this week, you know, unless it just suddenly decides that it's going to sell off on a weak dollar and, you know, lower yields, you know, I would think it looks pretty good for gold. But those are the big spots. Again, it's the healthiest above 42.74 to 42.85. I see that as fully constructive. You could come down here for one more test, I think would be okay, and maybe take out Thursday's low. That wouldn't be the end of the world. And then again, big back test, 42.38 to 43, and, you know, kind of 4,200-ish. I don't really want to see that low. I will not be leveraged long gold. I will still keep the miners for some time. I'd probably even maybe hold them through a failed breakout. I don't know, but you definitely don't want to see that happen now. And again, can't say enough. I'd be very careful up into this 44.50 spot.
Yeah, I mentioned at the onset that the macro data points are, you need kind of big moves in the macro data points to matter for the equity indices, but you don't really need them to matter. You don't really need big macro data points to outperform to move gold or to move the bonds or to move the dollar. And so Wednesday's data point is going to be a very important data point. We have the CPI. We had a pretty weak CPI print last month, which gave the Fed cover to not raise rates at the July meeting, although subsequent to that, several members have come out and said they're, still in favor of rate hikes at, as early as the September meeting. And so if we were to get a hotter than expected CPI print on Wednesday morning, possibly followed by that PPI print on Thursday, the talk of rate hikes would come back, even with the poor payroll print that we saw last week. So that's going to be obviously very important for the dollar. For bonds, which have been, certainly much weaker packs, I think, than I would have thought, given that weaker than expected inflation print, and then given the weaker non-farm payroll print on Friday, bonds are soft still, and they're weak again to start the week. Maybe that's just with the oil price moving higher a little bit here. But for you, Pax, what are the key levels that you're watching for bonds? And is there a level where bonds get to where you say, man, equities are going to notice this now?
We take out 108.08. If we take out the low from 2 weeks ago or a week ago, then yeah, I think that the equities are going to, at least it's going to drag on the rally. If we take out 108.08 in the 30-year bond, we're going to see 107.04. We take out 107.04, we're in trouble.
107.04, just fun fact, is 2023 lows.
Right, October of 23.
Yep.
So if we take out that low, then we're there's a whole ton of long-term support in here. And we talked about this last Sunday. It could be basing, the 30-year bond could be basing in here, technically speaking, between 108.08 and 109.16, it could just base here for a little bit, trade lower, test it, and then come back up again and then run. It all depends on what goes on with. I think a lot of the weakness in the 30-year bond obviously has something to do with Japan. So in the euro, and let's see what happens with all of that. But I think the very least, I think it's going to drag on the rally, which means, maybe we'll just kind of sit here and mess around in the 77 handle for a while. That would suck. But, the last 2 weeks in the S&P has been a great trade. The low was in the NASDAQ too. The low, 27,280, basically. That was the level I tweeted a couple of days before we got there. That was a really good spot for the NASDAQ to stop. The S&P stopped just at, 73.24, which was an old low, reclaimed 73.57, got back above the quarterly pivot and screamed higher Monday and Tuesday. And it's been a rough trade. Wednesday, Thursday, Friday, it's just been a little bit of back and forth, doing nothing in the indices, just kind of waiting to see whether the NASDAQ is going to get back above the quarterly pivot or stay below it, whether the S&P is going to drag the NASDAQ with it, or whether the everything else is going to start dragging the spoos with it, and that's what I want to see. Otherwise, this is there's better things to trade. Like I said earlier, this is a keep your powder dry in the indices, until it's not, and either we break out, continuation to the upside, continuity, I like that word. That you use, Sarah. We've got continuous trading to the upside, or we turn around and we start trailing back lower. And in which case, that'll be a fun trade too. I like when we break more. I don't plan on trading the indices really, unless there's something to do. I think gold is much more interesting. And anything between, I don't want anything to do with gold between 43.25 and 44.24. If we get back above 44.24, then I'm going to add up to 44.90, and then flatten up there. That's it. Who knows what's going to happen with the CPI Wednesday? And then PPI will be a little bit big too, won't it? Because it's still an inflation number. And, who knows what the hell kind of crazy shit's going to happen this week, and what's going to happen with the war, and what's going to happen with this low-key deal, or, whatever he's calling it. And, who knows what we're going to get. So just keep your powder dry. what, I don't know how many times I have to say this to you, and if I have to repeat it over and over again, if I'm accused of repeating things, so what? Go figure out how to be a long-term profitable trader by making it up every 30 seconds, you schmuck. Take your time and realize that you do not need to be involved in every trade, that you can't possibly be involved in every trade. The only people that make money every day are YouTube streamers. Traders don't make money every day. You need to be careful, and you need to repeat the same things over and over again in your life. In your trading, you need to be consistent in your life, and you need to be consistent in your trading. You need to be consistent in your trading and consistent in life. I mean, it's the same thing. And if you don't want to do it, keep throwing shit at the wall and hope something sticks. Maybe you'll wind up driving a Ferrari on Instagram too, only to sell it to me when they're worth less.
Yeah. Just on those on that inflation data point, the core CPI month over month expected is 0.2% for the month of July and 2.5% year over year. So we'll keep an eye on those numbers. If they come in hotter than expected, it's going to bring back this idea that the Fed, more and more folks in the Fed will be thinking about a rate hike as soon as September. If that number comes in weaker than expected, I think we're going to see a bit more of what we saw last week with the dollar weakening a little bit, gold rallying quite some, a bit, the front end yields moving down. I think at the long end, though, it's hard to see kind of big bond rally when you have all this supply that continues, right? You have the deficit spending in the U.S., the deficit spending in Japan and in Europe. Then you have this forced, or not that it's forced, but you have this treasury selling coming from Japan to slow down the weakness in the yen. Plus, we have all the AI capex debt that continues to get sold. Google did another huge bond deal last week, $25 billion of paper came out at spreads that were wider than they did 3 months ago, and those are wider than they did 3 months prior to that. And so you're continuing to see the credit cycle weakening a little bit, credit spreads widening. If I go to this, you guys mentioned the October of 2023 highs. I mean, the 10-year yields in October of 2023 peaked out a little bit above 5%, 5.02%. 30-year yields now are actually higher than they were in October of 23. We actually made a high last week, 528. The highs back then were, I think, what were they? Like a 517. So, and then 20-year yields, which kind of, jive best with the long bond futures contract, are still a little bit below. They kind of peaked out at 538 back in October of 23, and they're now 521. So this bond market remains quite weak. And you're seeing it really in other areas of the economy away from the AI story are struggling. I mean, housing market continues to struggle. Mortgage rates are making highs. Housing momentum is deteriorating. The low-end consumer continues to struggle. So this is going to matter, and I think that showed up a little bit in the payroll numbers as well last week. So
let's not forget we've got the 10-year auction on when is it, Wednesday, and the 30-year on Thursday.
Yeah.
So, we have to be alert for that. Yeah, that's going to matter.
And those are going to come right after the CPI print. So that'll be an interesting supply for sure here. Just last look at the tape before we turn it over to the crypto closeout at the top of the hour. NASDAQ is flat. S&P is down 15 basis points. 11 handles 77.68. The Russell underperforming, down 20 bips. I mentioned the bond weakness. Nothing really to write home about too much. Gold up a scratch, call it flat. Silver up a little bit. Oil, I wanted to shift to oil. Sarah, oil is higher to start the week. It's been the asset that the president has done the best job, I think, of manipulating, continuing to talk about imminent deals and really trying his best to make sure that the oil price does not run away from him 3 months ahead of the midterms. But what are the charts saying here for oil?
Well, I think you nailed it on the head when you said the president keeps fucking with the chart, basically. So, there was a big gap down last week. I'm still not interested in it. We're an inside month. Too much headline risk. It's at a goofy spot. It's not something I want to trade. Like you hear us say, there's easier trades. Like we're just sitting in this little range right now. So nothing Nothing really good there. I did want to mention before I give Farm his oil. I wanted to talk about the dollar real fast because it's often inverse gold and silver. And just like if you guys remember the monthly gold chart, right? We made lower lows on the monthly chart, but if you look at the dollar, we've made higher highs. So it's pretty much inverse, right? So we're coming off the top of this broadening formation and it's starting to come back through it. So this looks pretty weak for the dollar. It looked like this. So if you trade the dollar, the short would be below 99.58 and trying to come back kind of through this whole range, which would hopefully help our gold trade. But yeah, oil, I got nothing to say about it. Stay away from it.
Yeah.
Is what I'm doing.
Yeah. Farm, keeping oil on the radar screen here. Anything look interesting to you on the oil price?
No, not at all. I mean,
No.
I think I don't know. Did Trump just forget? I mean, the last 2 weeks in a row, we got to rally into the close and then just bag those longs at the open on Sunday. Did somebody not follow the script this week or what? But no, I don't have any interest in this. I'd rather look at my mother-in-law in her nightgown, but neither would be good. I mean, I've got some levels on there. You can screenshot them, but I really, again, just don't have a whole lot of interest in crude. I mean, like Sarah said, it's just been so heavily manipulated with headlines. I have very little interest in having to react to headlines all the time. It's just, I don't need to deal with that stress. And like I said last week and a few times, I like my trades, like I like my women big and easy, and I just don't see that in crude right now either. I don't see easy and I don't see big. So no thanks, I'll stay away and I'll keep one eye on it, but it just doesn't seem like it's mattered a whole lot to equities. Again, you're going to need to see that major technical break. I think if you see continuing strength in crude, I don't even know that it matters to bonds that much. I think they're going to decide if they're going to make that major technical break on their own. So Pax gave the levels, right? The 107.07 on the 30, or 107.04, I'm sorry, on the 30 is the big one. So it can chop around in this range. This is a prior range of consolidation, kind of this 110-ish to, into the 107s anyways. Is a prior range of consolidation. It could sit around there before making a decision. I think that major technical break, then that would suddenly matter to equities. I don't think they could ignore that kind of a technical break on bond price, and whether crude plays into that with any kind of persistent strength or not. I think bonds got to make their decision. I do think it's interesting on the bonds, and Craig, you remember this for sure. I mean, like in 2022, I would say they outperformed what I would have thought anyways, an expectation should have been, right? I mean, the curve stayed, wildly inverted. You had twos at 5.5 or whatever, right? As the Fed kept hyping, and like the 30s just never really wanted to play ball, in spite of what still even at the time was a reasonable amount of supply. And they just kind of subtly, I think, overperformed what they should have done. And now you get something like a stone ass cold NFP print, and they can't even get prior day high. I don't know. Is it going to underperform the way that it should perhaps be performing on cold data? That would be really bad and suggestive that the market is finally caring about the amount of supply at the same time that the Treasury is not issuing any long end. So that's kind of spooky to me. And I really would like to see the bonds find some kind of a bid off weak data. Or I do think it's going to be in trouble. And I think that ultimately will matter to equities in a very meaningful way. For now, set the macro tired hat aside, and we just price monkey it on equities for sure. And they're constructive until proven otherwise. So watch the major technical break. I won't really look at bonds. I won't really look at crude. Otherwise, I'm just going to see what equities are doing on their own and trade gold. And that's kind of where I'm at. So I don't want to look at them until we see those big breaks.
Yeah. Pax,
I think we can all agree that the easy trade this week is probably going to be gold.
Should be.
Yeah. I mean, we all kind of agree. So I like that.
Yeah, I think it's the easy trade unless you got a very hot CPI print, and then in which case I think you just you use time stop there a little bit, 8:29 on Wednesday morning. Make sure your position isn't oversized, just in case you're playing kind of a random macro data point that the government likes to F with. Probably maybe the government's screwing with the data actually helps you because they want to show lower than expected inflation, but who knows what level of manipulation they'll be after. But Pax, I'm curious, if I think back to doing this job for quite some time, when you think about the most tumultuous times for market trading, or times when when equity markets typically go through some swoons, the middle of August through the middle of October comes to mind often as a period. Do these seasonals really kind of matter for you? We're thinking about here, just kind of as we draw at the end to the summer. Is it harder? Are you sizing down positions? Are you waiting? Is there anything particular about how you approach the market here from a seasonal perspective? Kind of with that eye of there's risks often brew in this period.
I size down, Craig, when ranges contract and we don't do anything. I size down or I don't trade. I size up when the markets are moving and we have volatility. And those, I don't care what time frame you're looking at. Going back to the beginning of my career when the tech bubble bursts, it doesn't matter. Every bubble bursting and every high, every blow off top, every crash, every sell-off, every correction is kind of a surprise. It comes when everyone's bullish, everyone's on the same side. So I'm not saying that that's coming. It sure doesn't look like we are today, but gold, I think, in the bonds are telling us something, and I think we need to pay attention to it. The equity markets, I think that crude actually is a decent trade lately. The equity markets, though, didn't pay much attention to oil when we're at $100 a barrel. It's not going to pay much attention to it at 80 either. But we have a lot of things to look out for, to prepare for, and to be careful for. Going from now to September, I don't think we're going to do much, but going into October, man, all kinds of crazy things can happen. So just be prepared for it. Be quick and be nimble. Have a plan to trade either side of the market, as we're talking about here. Don't get too bulled up in one thing or bared up in another. Be prepared to trade whatever side it is, whether no matter what you're looking at, whether you're looking at Sarah's stuff, you're looking at farm stuff or my stuff, or ICT stuff, it don't matter. Whatever you're looking at, if you don't know where you're going to get out before you get in, then don't take the trade. If you don't know what your risk is, don't take the trade. If you don't know how to add your positions, or if you don't know how to take more out of the market than what your risk is, then don't take the trade. Just give yourself the benefit of time. Don't rush too hard. Don't rush too fast. There's a lot of great information, a lot of great trading processes, a lot of great trading methodologies and strategies, but they're all going to come down to three different things: managing your risk, managing your profit, and learning how to exploit your profit. So give yourself time in doing that.
Yeah. And thinking about just less from a trading perspective, maybe more for the longer term account. There is an election coming up in November. It's it's less than 3 months away, and there's a big potential here for the election to really matter, particularly if Republicans lose control of both houses, which is starting to become a potential possibility here, and that will have drastic implications for the president's ability to do anything, but also just the AI trade and the regulation around AI and crypto and the like. Democrats are back in control. Seems like they'll be back in control of the House, but increased speculation that they actually could take control of the Senate as well. So we definitely have to keep an eye on that. November volatility is very cheap right now versus versus history. The VIX is at pretty compressed levels here. So if you have portfolios that medium-term accounts and swing accounts, keep an eye on that. Hedges now are incredibly inexpensive for what could be a pretty big market risk. If you look back to prior midterm elections or just prior elections in general, we definitely get things moving a lot on those on that event. But Farm, last word to you. Anything you're really passionate about, focused on here for this week, whether it's market related or otherwise.
I mean, I agree that it's probably time to, have some kind of hedge on. I'll probably be hedged through the end of the year, at least lightly in some way. But again, you understand the areas where risk starts to increase. And for me, NQ is going to be the key watch with this 4-day balance. You break that back to the downside and you accept back below that RTH gap that looks iffy. I do think there are some trap areas that we can come down into, all the way down to 28.6s, 28.4s, and it could be okay. But that's your first sign that, like, okay, maybe we're not quite as enthusiastic about this, last week's move if we break this balance to the downside. Whereas again, if they dip into this and they rip out of there, that's probably a big trap for new highs. So I'm really just, for me, I'm not just hedging because they're cheap. I do like to add some hedges when they are cheap, right? Instead of when you need them. And then I'll probably add more meaningfully if we get some kind of a technical break. And again, for NQ, it's at bull gap and then ES prior all-time high.
Nice. All right, for folks who were looking for our Bitcoin view, we did touch on it in the middle of the show, but more importantly for everybody here, we got follows coming up on the Crypto Closeout to go through the Bitcoin charts and all the crypto charts. I've got a great guest for you this evening. Thanks, everyone, for joining us. Now let's kick it over to Follis and the Crypto Closeout. Let's get cracking.
Yo, what is up, guys? Welcome to the Crypto Closeout. It's your boy Follis. We're going to be spending the next hour talking you through the crypto markets, giving you some takes, hot, lukewarm, cold, and otherwise on the crypto market. Yeah, exciting show ahead. We, of course, have the homie Castillo will be joining in about 13 or 14 minutes. He'll be coming on, and hopefully we're going to have a bunch of questions for him, and he's going to walk us through his views on the market and talk us through some of his charts, some of the charts that have his attention. But yeah, it's an exciting time in the market. I was just watching the show put on by Craig and the crew, and some interesting observations to be made in the TradFi market. Obviously, the story of the day is crypto lagging. I don't think that's going to come as any surprise to anyone watching this. We have the S&P putting in an all-time high, stocks still ripping, everything looks really, really strong. And of course, BTC struggling to get back above this 66K level, 65.4, 65.5 is where we just topped out as the TradFi markets opened. And very interestingly, we took this key buy-side liquidity level. This is a level that I have been talking about on my own streams during the week. These buy-side highs, I said that there was probably going to be some kind of move towards them as we consolidated here at resistance. As you guys know, consolidation at resistance rather than being bearish. A lot of guys look at this type of price action and they think it's weakness, it's indecision, price is going to roll over. Usually it's the opposite. It's at least indicating that we're going to get some kind of pop towards the highs before any kind of reversal. And yeah, interesting price action to as we kind of mark the last hour of the trading week as we approach the new week, the weekly open. We have swept this buy side high. Is the top in? Who knows? It is a little bit of a dodgy area. I've mentioned this already. I've said that this is a key resistance level, that if we wanted to see higher prices in August, if we wanted to see an eventual breakout of this consolidation that we have been in since June, that we needed to flip the structure. And very interestingly, so far we have not flipped the structure. This is more like an SFP pattern. For those of you who don't know, an SFP is a swing failure pattern. It is effectively where you get price runs a high, takes liquidity and reverses instead of closing candles above that high. So rather than getting this shift of structure, we obviously have this downtrend that price has been in since around the middle of July. I said that this was the high that we needed to break in order to think that we do something like this going into the rest of the month. But so far, all we've done is take liquidity at this high and print a little bit of a bearish hammer candle. I know a lot of guys call this a shooting star candle, but it doesn't look fantastic. Obviously, it's still very early days. There's Another hour to go in that 12-hour candle, another hour to go in the daily candle. But yeah, a little bit of a dodgy area, I would say, for BTC. I think if we can get some decent upside into the early part of the week, Monday and Tuesday, start closing candles above this 66K level, I think that the stage is set for a pretty big expansive move up towards the low 70s. And this is something that I have been talking about for a while. How for me, this is kind of trading. If you look at the BTC price action going back to, let's say, February, we've kind of had this, apart from some moments where we have expanded either up or down, we basically had this consolidation type PA, this range bound type PA. And for me, this was trading at a level of resistance, this kind of rounding bottom type structure that you often get, especially given I suppose, the level of inefficiency left by the move down here from around 75K all the way down to the low 60s. There's a pretty big inefficiency here that the markets typically like to fill. And it wouldn't surprise me to see if we can see some kind of constructive price action, some kind of range breakout type price action. I think that the magnet, if I were to draw one, the magnet would be at kind of that 63. And this is some high level TA, guys. When your boy whips out the magnets, it's the high level TA. It's the rookie circuit 2021 type TA. But I think that if we can break out of this consolidation range, we're going to teleport pretty quickly to this kind of 72, 73K area. Definitely an interesting point. But yeah, as I mentioned at the top of the stream, the story of the day is crypto weakness, relative weakness, and we've kind of seen this at a few different intervals throughout this cycle over the last couple of years. We obviously saw precious metals were ripping towards the end of last year. Started this year, we had gold, silver doing crazy returns, crypto lagging, and then a lot of guys talking about the rotation that was going to happen, the capital rotation that was going to happen from precious metals to crypto. Obviously, we didn't really get that, at least not to the level that people were talking about or people were expecting. Then we had all this upside on AI, tech, hyperscalers, semiconductors, you name it, over the last kind of 8, 10, 12 months. Again, people now talking about the tech unwind trade, the AI unwind trade, and whether or not we're going to see any kind of meaningful capital rotation into crypto. Personally, I think we will. However, I think that the market has lower to go first. I think that the tech unwind trade, when it comes, and I think that we're closer to the end of that trade than we are to the beginning of it. I think when it comes, tech stocks, we're already kind of seeing the start of it. Tech stocks, AI stocks, we're going to see a pullback of 10, 20, 30, 40%, and crypto is going to go down with them. I think that we're going to see prices in the 40s. And I think that that's going to be your market bottom. I still don't think that the low is in for crypto. The drawing I have here is actually from the Crypto Closeout stream that we did with Credible Crypto, shout out Credible, where he was talking about this being his kind of level in the sand, this retest of this 2024 consolidation, which I like. Interesting to note, of course, that this marks a full retrace of the Trump pump, the Trump election candle, the Trump election upside that started in October 2024. But yeah, I still think we got one more leg down. This is a chart that I've looked at a bunch of times on this stream. I still think that we're going to trade into the 40Ks. I still think that we are going to trade below the realized price. And for those who don't know, the realized price is it's the average transaction price for all Bitcoin on chain, which in layman's terms, it basically means the average buy price for all Bitcoin at this moment in time. If you look here at previous cycles, we have never bottomed without trading below the realized price. And in fact, in most cases, we have traded below the realized price for 120 days, 300 days, 140 days, 179 days. So if we were to bottom here, it would be the first cycle that we have not traded below the realized price, which it's all speculation at the end of the day. We have a very small data set from which to draw conclusions. We have like 3, maybe 4 previous cycles. So take any kind of macro analysis like this with a pinch of salt. But that being said, if this cycle is to follow the pattern set by the last 4 cycles, then it would mean trading below the realized price. And the current realized price, I think, is about 53K, 52.9K, something like that. So to that effect, I am expecting us to trade below this 53K level. And that's kind of why I'm saying that I think that we're going to trade into the 40Ks. And I've already mentioned a few times before that once we start trading into the 40Ks, depending on what the market is doing at that moment in time, that's kind of the light bulb for me. That's kind of the switch for me to start thinking about risking on, to start thinking about adding exposure, to start thinking about adding back the crypto that I sold this cycle. I de-risked a ton of my crypto back in August last year, de-risked some more at the start of this year. And a lot of the coins, it's crazy. A lot of the coins that I sold were like, they were already down like 60-70% from their all-time highs because altcoins did not give the alt season that a lot of people were expecting, but a lot of those coins ended up going a further 80-90% from where I sold. So interesting cycle it has been for altcoins for sure. Having a quick look at Ethereum, I've already kind of mentioned my idea for Ethereum. I'm kind of revising this idea now. I have been saying that I would look for big shorts in the 2.2K region, which would be if you take this leg from the high that we put in here in April to the low that we put in June, this would be the 7.1, 7.9, call it retrace, which is usually a good spot to look for reversals. It would also be a fill of this inefficiency that we left behind. As you guys know, the markets like to rebalance imbalanced price action. I'm looking at Ethereum now, man. It looks terrible. It looks really, really weak. And I'm not necessarily sure, are we going to get that big push up into the 2.2K region that I thought? This plan, of course, was kind of relying on there being upside in July and August with the idea that we would eventually roll over closer to the midterms. I know that's something that Benjamin Cowan has been talking about quite a lot recently, how in previous cycles we've had bearish price action during midterm years, bearish price action as we approach the midterms, and that downside eventually retraces kind of once the midterms are passed. But yeah, midterms, I think in the US, and maybe Castillo can confirm that when he comes on, but I think the US midterms are in October or November, something like that. I'm not actually from the US, so I'm just a speculator. But yeah, I think that we will eventually roll over. I'm expecting lower prices into the remainder of the year. I've already kind of said that my targets for ETH this cycle, I'm looking for somewhere around the 1.1, 1.2K level for Ethereum. That's where I'll start adding risk with the idea that I will have dry powder all the way down into the hundreds, into the triple digits, basically, which sounds extremely bearish. But again, when I mention these price targets, the idea is not that I'm saying that this is 100% going to happen. It's more the idea that I'm planning for if it does happen, right? And you can ascribe various probabilities to these outcomes. You can say, okay, I think there's a 40% chance that we're going to see, 1,200. And I think there's maybe a 20% chance that we see 1,000. And I think there's maybe, 40% chance that we go sub 1,000, whatever it is, right? You can ascribe those probabilities in your own head. But the idea being that you have a plan no matter where the market goes. So you're not caught off guard. But yeah, I really like the idea of stocking up on Ethereum if we can clear these lows. I really don't like these ugly lows. I think that we're going to retest this anchored VWAP level going back to the previous high that we set in 2018. We've already seen one reaction from this high time frame dynamic support band back in 2022. And I'm expecting another retest, which would bring us down to this 1.1, 1.2K level. A lot of guys have written off Ethereum, and this is something that myself and Credible spoke about when he was the guest on the Crypto Closeout a few weeks ago. He said that the more people talking about the death of Ethereum, the more people saying that it's over, that it's never going to make a new all-time high again, that makes him even more bullish and even more convinced that this is something that he wants in his portfolio. This is something he wants exposure to. Because the more grave dancing, the more naysaying, the more sentiment is kind of showing him that the bottom is close and a possible reversal is in play. And we actually saw this. Like, I mean, I've been in crypto since 2021, and we've seen ETH sentiment be at rock bottom. I've seen it at least 2 or 3 times, and all previous instances of that rock bottom sentiment resulted in some upside. Now, I'm not quite the same bullishness as Credible. I know he's looking for he's looking for like 20K or something like that. That would make me very wealthy, but I'm not necessarily sure I'm playing for that. I would love to see a new all-time high playing this macro range. And this is another point where it's like people look at this and they say, that can't be a range, man. Ranges don't work like that. Well, I mean, crypto is a unique asset class. Liquidity works differently. It's a nascent asset class. It's the most volatile asset class, arguably. So this idea that we would have a range that spans, like 3x is not crazy, right? It's unprecedented for TradFi, but it's not crazy. So I would be looking for something like that. So as we come to quarter past the hour, I'm going to bring our guest for this week on, who is my buddy Castillo. Welcome to the show, Castillo. How are you doing?
I'm doing good, Foles. How are you, man? Thanks for having me. Appreciate you guys.
Yeah, thanks for coming on, man. It's an absolute pleasure. We've actually never streamed before, never done content before, but I've been an admirer of your work on X.
Yeah, I know. I mean, I've followed you for a while, man. I agree. Same thing. I've always looked at your charts. I've always, studied them, and kind of like one of the confluence people that I kind of like respect. Like if you're seeing something that I'm seeing, then it's like a good confluence aspect of the game, right? When you have someone that you kind of like look up to, and kind of like you respect what they're doing and their charting skills.
I love that, man. Yeah, and the sentiment, likewise, exactly the same sentiment. So maybe you can just give us a quick, like, whistle-stop tour of like who you are, your journey in crypto, and how you got to where you are today.
Yeah, man, absolutely. Really, I got into crypto in like 2017 was when I first made my first crypto trade, and it was XRP. I mean, that was kind of like the one that was kind of going hot back then. I traded penny stocks probably in about 2015, 2016, but it wasn't like, I was just more interested in trading. I was just kind of like piquing my interest in the stock market, trading, what it could do, kind of like learning from, different paid groups in the penny stock world or just in the stock market world in general. And then I had a buddy that kind of reached out to me, and really it was about the end of 2017 into 2018. And the first thing he brought up was XRP. And that was back in the day when XRP was going crazy. We didn't have very many exchanges to use back in the day. It was really, I got involved through using BitMEX, and this was a long time ago. So that's kind of how I got started with crypto. I know RIP, right? It's sad. But that's kind of how I got started with crypto. I was always interested in trading. I was always interested in learning from the stock market. I had, one of my uncles kind of told me like, look, there's only 2 real ways you could build like real wealth in this world. And it's like real estate and stock market. So that like kind of like piqued my interest into just like learning about it. It took a long time for me to get to where I was. I was kind of, still working the full-time job, probably just kind of like studying stocks on the side, jumping into crypto, then kind of had a little bit more success really closer to 2019, and then obviously the 2020 COVID craze. So it was kind of just like sticking around, piquing interest in blockchain, piquing interest in, what a public ledger was, and, kind of seeing that as like the future of finance, and then kind of just like sticking it through, man. You start to research some of these projects, some of these protocols, what they do, what they provide. And then, one thing led to another, and you're kind of like stuck in the industry, or at least watching it every day.
I love that, man. So as someone who's been around for multiple cycles, how has this cycle been for you? I know a lot of OGs will say that this cycle has arguably been the most challenging, maybe the same asymmetric upside that people saw in 2021, that people saw in 2017, 2018 hasn't quite been there. How have you find this cycle for your own trading?
Yeah, I mean, for me, it's very for Bitcoin, it's very similar. I will say that. I think this cycle has been the hardest because of altcoins. I know you kind of touched on that. I mean, really, there hasn't been an altcoin craze since 2020. It's been like 6 years since we've seen those real big multiples from, those higher market cap altcoins. So it has been difficult in that aspect, but I got involved with crypto because of Bitcoin. That was like my main reason. And, I started, following a lot of guys back in the day, like Tone Vays and, even like Craig Wright, and they're very pro crypto. And, they talked about Bitcoin, Bitcoin, Bitcoin. And so that was kind of like where my thought process was. Altcoins were always one of those things that were kind of cool, but I didn't really see big gains on altcoins until 2020. And then leading into this cycle, yeah, they've just been pretty dead in the water. Like I said, we haven't gone those massive runs since like 2020 of COVID. So that's probably been like the most challenging thing, at least for people coming in, and even for myself. You think altcoins will have any sort of cycle like they've had similarly in the past, and it was just Bitcoin was making all-time highs, 120, 125, and altcoins were really nowhere to be seen. Some had good gains, but it was nothing like it's been in like 2017, and then obviously 2020.
Yeah, I couldn't agree more. It's been an interesting cycle in as much as I think it's really rewarded guys who have the ability to adapt, and the guys who have been flexible with their bias, with their trading styles, and maybe not try to force a style of trading that isn't working. Whereas I think that something that I noticed in 2021, because I joined, like, I was one of those retail guys who joined in 2021, and you probably sold all your bags to me, right? When I joined the top. But like something I noticed in 2021 is that actually um you were forgiven for a lot of sloppy mistakes that have been really badly punished this cycle. And that goes for things like execution, it goes for things like capital allocation. There's really a myriad of different things that you had to be more on the ball this cycle, or else you would have been punished. And I think a lot of guys, were reading from the 2021 playbook, and they kind of got taken out because of that.
Yeah, 100%. I mean, really, it's adapting was huge, because there were still some good runners within, the downside that happened on most altcoins. There was still a lot of good, you kind of had to adapt to like meme coins. As much as people hated them and didn't want to get involved and thought they were junk or whatever, they were the things that were pulling the multiples. And so it was a big cycle for adapting to that. I was always one of those ones that just traded, for the most part, BTC and Ethereum. That was kind of like where I've always kind of had my bread and butter. Those were the charts that I've watched for so long, that I was kind of like able to just kind of really focus on those through a lot of it. But yeah, I mean, altcoins are just one of those things that if you didn't adapt, you were really getting hurt. 'Cause I think you mentioned earlier, altcoins were down and they were really like legging another 80%, 70% to the downside, to where a lot of them are at, all-time lows. Will they ever bounce back? There might be a handful of them. It's, really about focusing on, crypto is a very attention focused industry. So if meme coins are hot, you really have to focus on meme coins. You can't really look at like, the Dino coins with that back in the day with like Litecoin and Stellar, and like it was a very big cycle for adapting to that sort of stuff. And you're right, a lot of people did fight it. I had my moments of fighting it as well. What's this new kid on the block? Oh, meme coins. Oh, I really don't want anything to do with them. But that was the main focus. And even like NFTs too. That was a very interesting time to where like, hey, if you adapted to JPEGs, you could make life-changing money. And so there's been some very interesting times within crypto since, I've gotten involved, and just seeing how it's kind of changed cycle to cycle is just very interesting to see like what comes next, and again, I have no idea what comes next. I always like to think I might have a pulse on it. Is it going to be AI crypto? Is it going to be a whole nother form of, maybe the whole on-chain tokens get hot, obviously hype lighter, there's certain things out there. Maybe we have a whole influx in that kind of happening. So it'll be another probably moment of really needing to shift your focus onto what is actually running, instead of being like stuck in the olden days.
Yeah, well, I thought ordinals was going to be the next big thing, so I don't think I'm the guy to talk about that.
Yeah. I mean, there was a moment I did too. So it's tough.
It's interesting the point you just make there, though, about attention. And that's something that Trader Mercury said when we had him on the show about 2 months ago. He just said, man, the biggest alpha you can ever have in crypto, the biggest edge is just to focus on the thing that has the attention, right? Stop trying to be the smartest guy in the room. Stop trying to be the guy that's on, the far extreme of the bell curve trading things that no one's ever heard about. He said that like the most money he made this cycle was just trading hype, and he started trading it
Yeah.
when everyone else was trading it, right?
Yeah.
It's not like he was one of these guys who started trading it when it was like $6. He started trading it after it had its huge run, and it still did like plus 100% gain from when he started, because he knew that strength, that attention, that mind share would feed into continuation of the move and further momentum. So yeah, I think that's definitely something that people should have in their mind when it comes to trading crypto. Speaking of coins, I would love for you to walk through some of your charts and maybe tell us what has your attention as we move into the new week.
Yeah, yeah, absolutely. I mean, realistically, for me, there's only about three charts that I'm looking at as far as altcoins goes. We could look at Bitcoin and Ethereum structure here in a little bit, but the three I'm really focused on are Uniswap, Hype, and Pump. And I
Nice.
think those are really the three that I've focused on for really like the last, I don't know. I want to say like maybe a month and a half, 2 months, that sort of thing. Uniswap, obviously, I started focusing on them because of everything that was happening with like Robinhood chain, right? There was a good impulse move on that, and so I was kind of just following that. Ended up having a good couple trades here and there for swings, but I do feel like we are kind of coming into like a moment of resistance for a lot of these. I know you kind of talked about having like a leg lower on both BTC and Ethereum, and I'm kind of right there with you on that. But it's really been for me Hype, Pump, and Uniswap. Looking at Hyperliquid too, I was really really interested in the sweep of these lows, but then there wasn't really like a good reaction out of it, right? It was just one of those things that we had a sweep down in this area. We ended up deviating. We got acceptance back above. You could have structured a trade from there, but it wasn't like that it didn't have that price action you really wanted to see, right? And now it is looking a little bit weak, like what you were talking about with like Ethereum. It doesn't look great, and then obviously we have like this big fair value gap. I think there is an area that gets front run on Hyperliquid, and maybe it is down at this 45. Maybe we come back down to 47, kind of filling some of this gap, and then a lot of people are going to be calling for like sub 40, 39, something like that, and then we can kind of like deviate out. But it still is one of the most important charts to be focused on because, like you said, like you and kind of Mercury were talking about, it's what is getting the attention. Hyperliquid and what they've done and what they've built is probably something that's going to have longevity. Long before for a long time. I mean, you got to think they kind of changed the game with their decks, and a lot of people are kind of following in their footsteps. It's kind of like the same thing that happened with like BitMEX too, right? Like they kind of changed the perpetual trading game within crypto. Then you had Binance, then you had Bybit, then you had all these other exchanges kind of like pretty much copy and paste their entire structure. And I think that's kind of going to be something similar to what happens with a lot of new, maybe this cycle, we start to see a lot of dexes, maybe we start to see a lot of people getting involved and these coins do start to make pretty good multiples. Lighter's another one that I kind of missed. I know that they ended up having a really good, I think I actually was watching some of your TA on it, and
It's been an incredibly clean chart. Yeah.
Yeah, and I was late to the party, and really I didn't start noticing it until like back above 2, right? So there was a good range that's kind of formulating up here, and again the chart still actually looks pretty good. And you got to think about what Hype did, right? Can Lighter do the same thing? I know you were talking about it back in this structure here. A lot of people were kind of like longing this on the way down, but there was a nice clean range that formulated, and then this retest of a breakout on this resistance level was so clean, and I completely missed it. It is what it is. You can't catch everything, but I think a lot of perp dex coins we really need to kind of focus on this coming cycle. Lighter is going to be one of them, obviously Hype, that sort of thing, and surprisingly Pump as well. I really like the formation that Pump kind of had. For a majority of altcoins, when 1010 happened, we had that massive liquidation wick to the downside, right? And it's basically just been a slow grind down on all of them, whether they filled the wick of 1010 or not. But that's like kind of the range that I'm kind of focused on right now. And a lot of them are kind of like sweeping these these lows here. I mean, pump is just a perfect example on what I would like altcoins to do at these lows. You deviated, you had some support, and then you get acceptance back in. And then, I still think higher on pump. I think this, mid-range of the trend from mid-range of the channel from the 1010 massacre, for what a lot of people like to call it, is a good price target for pump going forward. And I would like for more altcoins to kind of start printing this, because they're a lot of them look very similar, man. They really do, to where it's just a slow grind, kind of formulating a base here, and most of them are down 90% plus, right? So it's like, this is kind of the time you want to be focused on altcoins, whether you think they're going to go lower or not. These are just kind of those formations, and pump is just a perfect example.
Well, you've really hit the nail on the head there, because like the coins that you want to be paying attention to, like you just showed the pump chart, you just showed the LIT chart. It's these coins, not the coins that are downtrending and just putting in new lower lows, new lower highs, big structural downtrend going back over the last 12, 18 months. You want to wait for the coins that are putting in these rounding bottom type structures and finally showing some upside potential, right? They're finally breaking out of that consolidation. They're finally flipping structure. They're finally putting in a new higher high. That's when you need to start paying attention. We saw it in LIT a couple of months back, and look what happened. We got a 2x or 3x move off the lows. We're now seeing it on pump, right? So it's like there's comparatively little to gain from shooting long trades into these high time frame downtrends, comparatively much to gain from waiting for those alts to bottom out and put in some constructive upside price action and then start looking for longs.
Yeah, 100%. And there are some altcoins that I do have on watch, just like in general. I usually kind of like to break it down in like segments on some charts, to where we have the AI sector that looks pretty good, and obviously the AI sector. I mean, it actually doesn't look good, but when I pull up the charts that I think are the best, it's like Tau, Render, FET, Near, ICP, just some important ones to focus on, and then just like some other in general altcoins that are doing okay. Is another one I like to watch. Obviously, Sol, Plasma, XPL had some decent moves to the upside. But for the most part, it's like if you overtrade in crypto and you kind of overtrade, at least with leverage on all of these things, they're not all going to work. So you kind of have to dial it down to like, obviously the big guys like ETH, BTC, Sol, and then you dial it down even more to like maybe 2 or 3 altcoins like Hype, Uniswap, Pump, Lighter, that sort of thing. And you don't want to be like too dispersed looking at too many things. You really want to focus on the charts that are actually moving. And even like Uniswap here too, it is coming into a bit of resistance, but I still kind of like that, right? Because we kind of like deviated above. Is this an acceptance back down in, or is this a retest of these prior resistance levels, where it's just kind of like formulating a support, building a base, and then maybe we get that next leg up into like maybe $4.50, $5. It is one of the ones that I'm continuing to watch. I do like it, one of the best. But when it comes to trading terms, I still like just trading Bitcoin and Ethereum. I think that they trade the cleanest out of all the crypto market. It's very clear that it needs to be everybody's focus when it comes to trading, to focus on Bitcoin and Ethereum. I understand a lot of people love meme coins, and I think that what they produce is awesome, right? Like if somebody can throw $200 in and pull out 100K, like that's insane. I understand like the want and willingness to want to focus on meme coins, but I also think the perspective in crypto is a little bit jaded, because it's not all about meme coins. Yes, you can make multiples from meme coins. The likelihood pretty low. I think a lot of people in crypto should focus on building like a real and true trading skill set. Learning TA from Bitcoin, learning TA so that they can trade Bitcoin and Ethereum. You can dabble a little bit with meme coins here and there, but it's hard for it to be like your sole focus with like trying to make it in trading.
It's the survivorship bias diagram. The airplane with all the red dots on it, right? It's like, the thing about meme coins is that you only hear about the success stories. The guys you see at the top of your algorithm are the guys who flipped $500 into 5 million by, getting in the right coins and selling at the Pico top, right? But you don't hear about the 99.9% of guys who just like lost their life savings. The thing about meme coins it is really like it pushes that element of the casino to its logical extreme, to the point where I don't want to say that there isn't an element of skill, because there is huge element of skill, and some of those trenchers are incredibly gifted at what they do. But it does ratchet the look element up to the point where sometimes skill takes a bit of a backseat. Whereas like perps trading, as you say, if you can build a trading system that can identify repeatable setups, that can execute in a variety of market conditions, that can manage your downside, manage your risk, you're going to be able to make consistent money no matter what the market is giving you. And there's something beautiful about that.
Yeah, 100%. And I actually wrote an article on X not too long ago, and it was kind of like basically saying like crypto's big miss. And I thought that like crypto's big miss was most people getting involved because they see the success stories of like trenching. You know what I'm saying? And I think that most of the time people would have been better off just like building for a year and a half a trading skill set instead of just trying to throw a ton of money into all these meme coins kind of popping off. But also there is a real some trenchers are very gifted. The way that they can spot certain things, or even just like build a trading bot to where it disperses maybe like 20 soul into everything that bonds, and hopefully they hit like a winner. And the trenchers are really smart, and it's a very cool dynamic to watch. Obviously there's a lot of losers, but the guys that are winning, it's almost like you got to tip your hat to them, because they're doing something that is kind of abnormal for crypto, right? And it was like the same thing with NFTs too. The guys that just had their finger on the pulse for NFTs, and they were minting the right ones, and they were kind of like following storylines. It's like you have to tip your hat to them. And I'm always an advocate for people making money. I think it's there's so much, people can be so cynical when they see other people making millions, but if in the industry that we're trading, you see people that are like making multi-million dollars off of something different. I always think it's like the coolest thing, because it's maybe not something that I would do or I would focus on, but it's still like bringing a little bit of light to crypto. And even like Trump's meme coin, right? It was probably the worst thing that could have happened for the industry, but there was just like a weird thing about it that was like, oh, okay, cool, the president launched a meme coin. That's kind of cool. Even though the light that was shed on it was kind of bad, it was still something that like, oh, okay, people are still involved with crypto, people are still kind of watching it here and there. I think the price action right now is pretty dead, so I think a lot of people are kind of like done with it, at least maybe outside of our own little X niche. A lot of retail doesn't really want anything to do with it right now. But looking at previous cycles, I think this is like really a perfect time for people to kind of get back into it. I really wanted to touch on this chart because you were talking about midterms. So midterms is November 3rd in the United States.
Gotcha.
And you were kind of talking about, like, Ben Cowan talks about it a lot. And every time after midterms, whether we drop or not, there's usually a drop in Bitcoin, either right after midterms or a few days after midterms, or maybe a little bit before midterms. There's always like that kind of that downtrend. But since midterms, the last two cycles, Bitcoin has increased 2,100%. Then in 2022, Bitcoin increased 700%. And I think after midterms of this year, a very safe, because it is diminishing returns, right? A very safe price target could be like 200K Bitcoin. It's not going to happen right away, but I think, if you just look at the way that the cycles have always gone about, I think into the election of, what is it going to be, 2028, we could still see some really good upside. So it is some time away, right? A lot of people won't have the patience to hold Bitcoin for this high, but I really like the way that you kind of were talking about midterms, because this is kind of a chart that I'm like, look, we don't have to outsmart the market. We know what happens after midterms. We know that there's a drop in Bitcoin around midterms. 2018 was a really bad drop. I remember this was the 6K crack, went all the way down. It was like a 50% drop. So we do know that some vicious price action happens right around midterms to the downside. And then same thing in 2022. We saw a crack right around midterms on Bitcoin, and I very, very similar thoughts to you, to where I think Bitcoin is pretty much going to chop until then, up and down. It's going to take people's lunch money, all that sort of stuff. And then there will be a crack to, I'm not going to say 40s, but I do think low 50s. Low to mid 50s is something that's very much on the table for me, and I'm very happy with adding Bitcoin down in that area.
I love that. And it's funny because I mean, I've been talking about lower prices for most of this year, and guys are like, damn, Follis, you're so bearish on crypto. If you're so bearish on crypto, why are you trading it? I'm like, no, man, I'm just playing the cycles, right? Because that's all that we have to go on is data from past cycles. And as I said on my segment at the start of the stream, it's obviously dubious, right? It's obviously very speculative because we have such a small data set from which to get, information about what's potentially going to happen in the future. But it is a data set. It is information, right? It is something we can look at and go, okay, what has happened in the past? What is likely to happen in the future? And I think like I will be as bullish as anyone once we start putting in some constructive upside price action. Once we get this kind of breakout of this consolidation, this downside chop that we've been in, I'm going to be as bullish as anyone, man. I think we're going to have an extremely green year next year. I'm super excited. Like it's a funny one because, and I spoke about this on my own stream during the week. It's almost the inverse, right? When you think about sentiment and price, right? Because as price gets lower and the bear market deepens, right, and BTC just goes down and down, interest in crypto like dies, right? It plummets, but it actually should be the other way around, right? As price goes down and the risk reward to the upside becomes greater and greater, the asymmetry to the upside becomes greater and greater. That should be when people are paying more attention and getting more excited, but that's just not the way the human psychology works. But I guess like for maybe the guys who've been around a little bit longer, like yourself, or maybe guys with a little bit more experience, right? As price goes down, man, I'm looking at it. I got the cartoon dollar signs in my eyes, man. I'm just getting so excited about what the future holds. And I'm looking, as you mentioned, maybe 200K price targets. Like even if we just put in a new all-time high next cycle and we go to something like 150, 160K, you're still looking at a really nice, 4 or 3.5x if you start DCAing once you get down into the low 50s or the high 40s, which is like, that's just super exciting to me.
Yeah, no, 100%. And I think, that's a very hard mindset to get into, especially when it comes to, like your money. That's always kind of, I just remember back in 2022 when everything that kind of happened in FTX, it was the first time I went to Dubai to meet like a lot of people. And it was just like the craziest sentiment. Like I'm in Dubai for the first time. I'm meeting all these people that I've been friends with on the internet. And the sentiment was horrible. Like people were so sad. Obviously the FTX bankruptcy, a lot of people lost their money and all that sort of stuff, but it was like one of those things that's like we've been here before. And I just remember back in 2018 too, when 6K finally gave out and we corrected about 50% down to like 3,200, the sentiment was horrible, like again horrible. And I think the sentiment has been pretty bad for a while now, but I think the difference is because of altcoins. Altcoins, people have been sitting in altcoins for, like I said, 5-6 years, and even myself too. Like there's some things I'm like, damn, are these ever gonna come back? Like, do I just really need to like give up on this protocol that I've been thinking is gonna be the new game changer, and however long. But I do like Ethereum as well. You were kind of talking about Ethereum a little bit. And I did want to touch on like what I'm like more or less kind of looking for as well on Ethereum. I think so. The reason that I think Ethereum is going to play a really big role in this cycle is because I think Robinhood chain, some people might not have liked that they came along, but I think they've kind of printed a blueprint for what TradeFi can really do with Ethereum. So I think, they kind of, they can kind of create their own chain. They can kind of control it. So Robinhood was the first. I wouldn't be surprised if many TradeFi companies start doing the same thing and start coming out with their own chain. And I think Ethereum does play a really big role in that. But I do agree. I was kind of on the target too. I was kind of on the setup to where I think that we could go up and then down first. But things are looking a little bit weak. I kind of play the way that I like to play technicals is very, very basic. I like to play it as like, support resistance levels. I had a mentor back in the day. We both started trading around the same time, and he just like blew past me with P&L. I mean, he made like 2 million in his first like maybe year and a half, maybe even less. And I asked him like, yo, like what's the difference between me and you? Like, why are you so successful and I'm not? And he told me something that I never forget, and I try and tell people this all the time. Like, he's like, look, he's like, don't overcomplicate it. There's indicators out there. You can look at EMAs and all this sort of different structures, and you can kind of create your own indicator. But he's like, if you can identify basic support and resistance levels, then you know where to short, you know where to long, you know where to take profit, you know where that risk is in place, because if that support doesn't hold, then that's your stop loss. So I've always taken that approach to where I look at current ranges, and Ethereum has had a really nice current range kind of formulating since back here at the start of February. And so this is kind of the range we play. It's like kind of like trade the range until it breaks type of mentality, right? And so upper limit is kind of an area that I look to be potentially looking to short, potentially looking to take profits from longs lower. And lower limit is like a discounted buy area. When things are red, when people are sad, when people are saying it's over, everything's going down, like those are good discounted buys. BTC has also created a really nice structure on a current range to where a lot of people missed this long from about the low 60s to the high 50s to where we got a pretty decent bounce out of it. I kind of stuck to my structures. We were at a lower limit. Support stays support until proven otherwise. I was able to catch a pretty nice trade on Bitcoin from these lows, and same with Ethereum. So it just kind of depends on how you like to structure your trading. I like NPOC levels, which is basically a form of volume profiling. It's a very basic form of volume profiling. When you look at volume profiling, I think people are looking like Sierra charts, EXO charts, where it's very complicated. There's so much kind of going on. I like NPOC prints because it kind of like oversimplifies it for you to at least creating liquidity grabs on prior days of volume that are of significance. And again on one of our most recent Ethereum trades, we were looking for a long down here at 15.59. We knew that there was a print down there in that area. We retested that area, and then Ethereum put in a bounce around 20% or so. So that's kind of the way I like to add NPOC prints in confluence with current range trading. Again, you can look at high term time frame, you can look at low term time frame. All principles still apply to where you still need to know like macro. Like, is it a downtrend? Is it an uptrend?
Would love to stop you there and just talk about NPOCs a little bit, because there's something that I use in my trading, but maybe for someone who's watching this and doesn't know what naked points of control are or how to trade them, maybe you can talk through that a little bit.
Yeah, so basically a naked point of control is just so I can zoom in a little bit and show it a little bit better, but these prints happen every single day. And it just depends on, the prints are going to vary from exchange to exchange. It'll be different on Coinbase than it is from, Bybit or Kraken, just because of the fact that, there's different volume inflows on each of these exchanges. But an NPOC print is the highest point of volume on that day. So if that doesn't get hit, then they stay naked point of control. And all these ones that have been hit are just normal daily points of control. So I like to look at naked points of control specifically because it looks and finds that volume and liquidity that has been untouched. And so even on Bitcoin right now, the next area for me to long Bitcoin is going to be lower at those NPOC prints that have hit. So I would like a rejection here, and I would like a retest of 62,675 to potentially long into and look for a bounce on this trade back to the upside. I have tried to be a little bit optimistic that we see a little bit more upside before midterms, but things are looking a little bit rough. I was looking for higher in July, and it just didn't really happen.
Would love to rewind a couple of minutes ago. You when we were talking about the hype chart, you said that you didn't really get the price action that you were looking for a long. I would love to know maybe what that price action looks like, or what the ideal price action for a long looks like for you. Let's say, because on that hype chart, we swept that liquidity level and we bounced. And I guess for me, it looks good. And for a lot of people, that's going to look really good. But what exactly were you looking for there that you didn't quite get?
Well, for me, so I have been a buyer of hype for a while. I just remember I thought I completely missed the boat on Hyperliquid. I thought that we were never going to get really through this whole run up. I was kicking myself the whole time. I never got into hype. It sucks. This thing's going to go crazy. But I always had a feeling that there was going to be a retest. So I was a big spot buyer of hype down in this area in the 20s. This was kind of where I was building. For me, why I'm not so excited on hype here is I just didn't like the rejection from this candle. It's kind of, this is a 1 day, but you can zoom in, it's like the 4, but I didn't like this sweep and a rejection back down. And then also there is this fair value gap that I think price can kind of dig into just a little bit more, right? We saw like a touch of it, and this could be a trigger on the swing lows right here. And this dude, this still offers a really great long trade. You can, use a little bit of leverage. You can still find ways to make profit on this trade. I think it's like, about 11%. If you're using margin, if you're using leverage, you could put 10x on that. You could put 5x on it. You can make anywhere between 50 to 100% on that trade. But I would still just like to see some form of this area get touched a little bit more. And so again, I think that there will be a level that gets front run on hype. And I think it could potentially be down where this price action currently had. It's like an order block. I know like Maine talks about it a lot. But I do think that it is a potential that this whole area could get front run. We deviate down. 46 comes, 45 comes, people are going to be calling for lower, sub 40, and then we can get a nice bounce out of here. So this is just a better risk reward trade, in my opinion, than just longing the sweep right here. And also, you got to take into consideration BTC and Ethereum too. If BTC and Ethereum look weak, hype kind of still having a downtrend after this, it's really a good kind of like inverse, like head and shoulder kind of setup, or not an inverse, but a normal head and shoulder setup to some downside sweep of range lows, kind of failed to bounce, and now it's just kind of teetering. So for me, I would love to be longing hype down at 46, or at least starting a position. Another thing that I like to take too is like, you're never really going to capture the bottom of the trade. Like the likelihood of you Pico ticking with size into a trade is very tough. So I like to just really create what I like to call areas of interest, and then be dollar cost averaging longs in those areas of interest. So if price goes against me for a little bit, I'm not over risked, right? You kind of DCA. Maybe you could break it up into where your initial starter entries, maybe 25%, then another 25%, then another. So it's kind of like layering those bids mentality. And so I think that's, a lot of people kind of want to go all in and all out at a trade. And granted, that can work sometimes, but I really like to dollar cost average into areas of interest that I like, and then scale out into upside, whether it's a median ML level, whether it's a golden pocket Fibonacci level, or whether it's range highs. That's kind of where my scaling out kind of, what I like to look at.
That makes a ton of sense. That's actually something I spoke about on stream during the week, is like people like to talk about, oh yeah, I'm gonna long BTC at 46.53K. And it's like, when you limit yourself to just one entry like that, you're effectively gambling that is going to be like the exact low. Like that's where you go from having zero risk to having 100% risk, like it's a switch. But that's not the way that risk or exposure should work, right? It should be a slide. It should go gradually from 0 to 20 to 40 to 50 to 60, whatever it is, right? As price approaches your level and starts trading into a zone. And there are a few reasons for that, but one of the most intuitive is that, like, let's say you have that level, that one level in mind, like you want a long hyperliquid at 45, right? Okay. And it's like price gets to 45. Now it's basically, you're crossing your fingers that it's going to bounce at that exact level. Because if it starts moving against you, if it starts moving down, all of a sudden it's 43, it's 42. Damn, it just lost 40. It's down to 39. All of a sudden, instead of that being a level that you can be deploying more and more dry powder or DCAing in or averaging your entry, you're actually feeling panicked now, and you're feeling uncomfortable. Now your entry looks really bad. And it might actually be a case that you capitulate on the trade idea before it even has a chance to play out, right? And that's one of the mindset shifts that I think that you have to make, especially if you're looking to like fill your spot bags for next cycle, right? Add BTC here and sell it at whatever it is, a new all-time high. It's like, don't think about your exposure as a light switch that goes on and off, right? Your exposure is more like, it's like a dimmer, right? It goes from 0 all the way up to 100 and all the way back down again. And it really is, you should be getting into positions and getting out of positions by risking on and risking off, right? But that is a gradual process, not like a 0-1 binary, right?
Yeah, no, I mean you kind of like explained it very good right there. I think that that's, kind of like the dimmer thing, because there's some areas that I do like, 'cause, and I'll just use my most recent spot trade on Hype as like an example. Because even in here, I knew that I kind of wanted to long Hyperliquid mid to low 20s, and then I would have loved to long it sub 20s, and we never got sub 20, right? So I didn't get a full position that I would have liked to. But what I do know is that I was interested in the 20s area. So within this, my first entry probably wasn't great. Like 26 on a low term time frame. It went all the way to 22, but instead of like panicking, that's like almost when your eyes kind of like light up. Oh, like I get to buy a little bit cheaper here. This is going to bring my average down. I get to then deploy capital into an area that I still like. I had a couple of bids below 20 that never got hit on Hype. But I would probably say about 70% of my position did get hit within this area. And so, sometimes when you take a starter position on a trade, you almost have to welcome lower a little bit. You know what I mean? Like a lot of people are very scared when price goes lower. But if you get in the mindset of like, no, this is where I'll start taking a position, and you could divvy it out however you want to, right? Whether you're looking at a $10,000 position size you want to take, maybe the first entry is 1,000, maybe it's 2,000, right? And you are kind of averaging that percentage down as price goes down, or maybe it bounces and you want to add a little bit more. But as long as you can just get in the mindset of not one entry is going to make or break this trade, because we all know that deviations happen. And, just even back in this area is a good example. I think that a lot of people on this deviation here on Hype, people thought it was going to break down even further. So if you're a trader and you know that deviations happen a lot of the times, it's hard to put a stop loss at the swing of lows, because when you're looking at the swing of a low, it's like a very common stop loss area for people to have. So instead of swinging the lows and having a stop in that area, you almost want to still be able to recognize that if that comes, you still want to be able to be buying in that area. And so again, obviously the 1010 massacre was another swing of the lows that I wish we had gone, and then into the 19s and 18s, I had a couple bids that just didn't get hit, but I still made money on the trade. It still is the best trade that I had this year, has been Hyperliquid because of this. Literally nothing else was doing well. So I was just very, very happy that I had a focus on Hyperliquid for the majority of this year.
I love that. And that was actually going to be one of my questions as we approach the last 5 minutes of the show. There was someone in the chat asking, can you talk us through your best trade of the year? And that was basically it. Another question here in the chat: what's one trading rule you've stuck to for the last 8 years that still works? I love that one.
Uh, I wouldn't really say it's a rule more than like a mental principle, and it's don't be over allocated. Do not put yourself into a trade where if that trade goes against you, you get taken out. And that's one of the things that's like really is like portfolio diversification. I don't know if it's like a rule per se, but it's more or less like a mindset. Like if you're diversifying a portfolio, you have to know what you're willing to lose. So maybe, I know, Trader Main and a lot of other people have talked about this as well, to where maybe you have a percentage to stables, maybe you have a percentage to, the big dogs like BTC and Ethereum. And then maybe, if it's a 100K portfolio, maybe you have 10K that you're willing to lose trading. It's just, do not get over allocated. Do not put yourself in a position to where you lose everything if this trade goes wrong, because we all know that you do not have to be you don't have to have 100% hit rate within trading. In fact, I think it's more realistic for people to have like a 60-70% hit rate on trading and be successful. Anybody that's telling you that they have 100% hit rate, I would run super far away from them, because it's damn near impossible. And also, I know people that are multi-millionaires that have a 50% hit rate, right? It's all about just making sure you cut losses when you're willing to cut losses. You make sure that risk is in place on what you're willing to lose on that trade, and then also making sure that you do your best to maximize winners when you do get those good entries.
Do you believe the 4-year cycle is still intact?
100%. Yeah. And really, again, just even this midterm, it's funny, like I was against it. I was like, no way, the 4-year cycle's over. A lot of it was due to altcoins. I even wrote an article on X about it, and I was dead wrong. I was just dead wrong about it. I thought the 4-year cycle was cooked and Bitcoin was not going to retrace here at the highs of 2025, and it did. But I have no problem saying I'm wrong, man. Like I had a thesis that got disproven, and you kind of just move on.
I mean, there was so much that happened this cycle that could have led you to believe that things were going to be different. We had, pump fund changed the altcoin game forever. We had ticker dilution, capital dilution. We had institutional involvement. We had DATs. We had treasury companies. We had a ostensibly pro crypto administration for the first time. Like when I joined crypto in 2021, the talking point of the day was like, the SEC and Gary Gensler are going to make crypto illegal, right? To go from
Yeah.
that to like it becoming a talking point in the US elections in just 3 or 4 years later, it's crazy, right? So it has come a long way, and I don't think anyone would blame you for thinking that the cycle theory was at least going to be a little bit different.
Yeah, 100%. And I think what got me was I just didn't think altcoins would bleed for arguably 7 years. So I
Yeah.
thought something would happen, but it just didn't. And then the pro-Trump thing was like the biggest shakeout and fake out I've ever seen. Who would have ever thought the first pro-crypto president would lead to essentially a bear market?
Right, right. And that's another curveball. We've mentioned BTC, we've mentioned Ethereum. I think you also mentioned Solana, we've mentioned Hype. Are there any coins we haven't spoken about this stream that you are going to be looking to add to your portfolio over the coming months in advance of the next cycle?
Yeah, I mean, I've definitely have had, one I would say Near and Ondo. I do like Near, and I do like Ondo. Near is kind of like an AI play.
Nier has
Again,
broken my heart so many times this
yeah,
cycle.
and again, it's like, dude, I think something will happen with AI. I don't know what. I know that everything in the stock market with AI is kind of like, quote unquote, the bubble is popping. But I do think that crypto AI plays could again have a big role in this coming cycle. So I do like Near and Ondo. Again, just random altcoins that I'm looking at that have decent structures on high term time frame where they kind of look like they're bottoming.
Ondo, of course, is an RWA play. Real world assets coming back into focus recently. Lots of people talking about them. And Ondo, yeah, it's not the worst looking coin. Again, kind of getting this accumulation at the lows, maybe starting to get a little bit of constructive price action. There could be something to play there in the near future, right?
Yeah, yeah, absolutely. So those are two that I got my eyes on.
Okay, I love that. Well, we're approaching the last few seconds of the show, so I just wanted to take this opportunity to say a massive, massive thank you to Castillo for joining us for the last 45 minutes, and it has been an absolute pleasure talking charts with you, my man.
Yeah, I appreciate it, man. Thank you guys for having me, and I look forward to talking to you a little bit more, brother.
Yeah, it's been a great one, guys. All right, thank you very much for joining us for this episode of the Crypto Closeout with Kraken Pro and NinjaTrader. We will be back, of course, next week for the next edition of the Crypto Closeout. Until then, guys, try and stay safe. Try not to get liquidated, and we will see you next time. Bye bye.
Later.